Ever wonder why some businesses thrive even during slow months, while others collapse under pressure? Here's the secret most don't talk about: smart use of business loans to manage cash flow. Stick around, because this could be the difference between surviving and scaling your business. Running a business comes with one undeniable truth: cash flow is king. It fuels operations, pays employees, stocks inventory, and keeps the lights on. But what happens when there's a gap between money going out and money coming in? For many businesses, that's where a business loan can become a powerful tool. Let's break it down. According to a US bank study, a staggering 82% of business failures are due to poor cash flow management. And yet, loans are often misunderstood. They're not just for emergencies or expansion. They can be part of a proactive strategy to keep your cash flow steady. Imagine this. You run a seasonal business and you know revenues dip every January. Instead of scrambling each year, you use a short-term business loan to cover costs during that downtime. You're not borrowing to survive. You're borrowing strategically to stay on top of operations. That's cash flow wisdom. Now here's a key stat. The Federal Reserve's Small Business Credit Survey found that 43% of small businesses applied for financing in the past year. Of those, nearly half used the funds to manage operating expenses, not growth. Why? Because consistent cash flow means fewer late payments, smoother payroll, and less stress. As business expert Barbara Weltman once said, cash flow is the lifeblood of a business. Without it, nothing else matters. And she's absolutely right. But timing is everything. Taking out a loan too late means you're reacting to a crisis. Take it too early without a plan, and you might burn through it with no return. That's why using tools like Cash Flow Mojo can help you map out your finances and forecast future needs. It shows you when cash flow will tighten and helps you decide when to act. Picture this like managing a dam. You're controlling the flow, not letting the water spill over or dry up. A business loan gives you the gate, but Cash Flow Mojo hands you the controls. Here's another way to think about it. Let's say your accounts receivable take 45 days to come in, but you need to pay suppliers in 30. That 15-day gap can cause chaos. A short-term loan smooths that gap, helping you meet obligations without penalties. And when used wisely, it boosts your credibility with vendors and employees. The key word here is wisely. Not all loans are equal. Know the terms, understand the interest, and be crystal clear on how it impacts your cash flow. Don't borrow just because you can. Borrow because it fits into a plan, ideally one you've mapped out with something like Cash Flow Mojo. The link to it is in the description and the comments. Another tip: avoid using loans to cover long-term problems. If your business model isn't profitable, a loan will just delay the inevitable. Instead, use it to solve short-term gaps while fixing the root issues. That's how you grow with confidence. Let's look at real-life results. A report by JP Chase showed that 50% of small businesses have less than 15 cash buffer days. That's just over 2 weeks before cash runs out. But businesses using structured financial tools had buffers up to 45 days longer. That's peace of mind in a volatile economy. Also, plan for repayment from day one. Don't assume future profits will automatically cover it. Build repayments into your forecast. If you're using a tool like Cash Flow Mojo, it helps you see how loan repayments affect your future liquidity, so there are no surprises. At the end of the day, loans aren't the villain. Misused loans are. But in the hands of a well-informed business owner, they can be a game changer. They provide the flexibility to navigate ups and downs, and when used alongside tools like Cash Flow Mojo, they're a smart way to protect your business's heartbeat. It's cash flow. Want more practical advice like this? Subscribe and follow Clifford Woods for more cash flow tips and ideas that you can actually use. Now here's the big question. How have you used business loans in your business? Were they helpful, or did they create more challenges? Drop your thoughts in the comments. Your experience might help someone else make a smarter decision today.